Hello, good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me, Sasha Faridi. And for now, the market has made that 20,900 mark as its own because we've been just consolidating around that level. Very, very range bound throughout the trading session. Just a 20 to 40 point range we have been trading within. It's been just around that 20,900 mark, but a bit of a red is what we are witnessing on the screen. Not really surprising given the fact that almost an 800 to 1,000 point rally on the Nifty in the last 5 to 6 days. Ditto can be said for Bank Nifty as well, with a 3,500 point rally in the last 7 trading sessions. So today, taking a bit of a consolidation, but Bank Nifty still holding out in the green with a gain of around 0.1%. It's broader markets which are outperforming today. So the mid-cap and small-cap space is what is seeing a lot of action. But the biggest gainers today are clearly from the power sector. Take a look at Tata Power. That stock is up almost 13%. Yes, there was a JM upgrade coming in, JM Financial, that is. So the stock is up by 12% after the 5% up move that we saw yesterday. Quite a bit of momentum on that one. You also have Power Grid, which is higher by around 4%. So one of the biggest index gainers is, of course, Power Grid. NTPC is also higher by 1.5%. And from the broader markets as well, a lot of names from the power sector, Torrent Power, SJVN, NHPC, all will come up for you on the screen. Gains of anywhere between 6 to 10% in all of these counters. So clearly, it's the power rally which is underway. And we were speaking with Nikhil in the morning as well, right, from Bernstein, and he was talking about how we are at the beginning of a multi-year upcycle.
Yeah, absolutely. He said that this is a decadal story. While as a house, they don't track the power financiers. That's where the exuberance has been. What with the likes of either an IR, EDA and the kind of premium that it listed at and continues to enjoy, or for that matter, PFC, REC. But NTPC clearly is their top pick within the power space. In fact, we'll play that soundbite as well in just a short while from now. I think we can toss across to that before we address the other newsmakers.
We are almost seeing a catch-up game, I'm guessing, from PFC REC, which is about anywhere between 1.3 to 1.5 times book value, towards an IREDA, which is almost 2 times book value right now. And PFC RECs, for that, they do have an advantage of being a Maharatna company. They can borrow cheaper in the long term. And a lot of their loan is government to government, which is less riskier as well. So we think there's still value. There could be value there in these names, given the loan book growth and less NPA risk.
Okay, power clearly powering ahead. The entire pack is actually holding out very well. Look at the constituents from within the power sector. They're all up in the green, not the financiers. The pure play companies. Tata Power, of course, like Anisha was just mentioning, it's a 12% surge in the stock, and it's intriguing to note that it was a gap up start, and from there it's only managed to build on even further. It's sitting at the high point of the day right now. That's Tata Power in trade for you, 329 on that stock. And if we were to just bring up the year-to-date chart, it would look a lot bleak as opposed to what some of the financiers, PFC, REC, IREDA, all of those have done. Of course, the commentary coming in from the house of JM Financial has been very strong. They've upgraded the stock to a buy. They're saying that there's a recalibration of the renewable energy space, which is currently at play, and Tata Power will enjoy a chunk of that. They're saying Mahindra is heading towards long-term resolution, aiming for a transmission uptick as well. So all that augurs well for this stock. A target price of 350 is what they're pegging at, not too far away given the speed at which this counter is actually seeing. The big newsmaker, of course, today has been the entire ethanol story, and the sugar stocks have been acutely sensitive to this entire space. Earlier, there were news reports which were indicating that perhaps there is a consideration by the government to curb production of sugar, but we at ET now understood from our sources that there is no such proposal. We had OMCs as well tell us that they will get ethanol to meet that 15% target till 2024. So pretty much things are status quo, and there is no meat to this rumor that's currently under works. Of course, a large part of the recovery is due to the clarification that we handed out on this story. In fact, let me take it across to my colleague Samir Dikshit and get in more details on the same.
So government has clearly said that no going to be such plan in which they are going ahead to reduce or curb the ethanol procurement. As of now, government maintains that they will go ahead with the committed target of 20% ethanol blending by year 2025, and for the same, whatever the ethanol procurement the government has to do, they'll be doing the same. For example, 1,000 liters of ethanol procurement is what government is currently understanding that they have to make for achieving this 20% ethanol blending target. And as of now, government maintains the same. Moreover, the industry body has also supported the government viewpoint. The industry body ISMA has said that yes, there are certain challenges. For example, there are rainy patches in areas like Maharashtra and Karnataka, but the overall production of sugarcane is likely to be healthy, and this will help to maintain the not just domestic demand but also the diversion of sugar for ethanol production could easily be achieved. So, ISMA, which is the industry, also maintains that the government should go ahead with the ethanol procurement and production target for two reasons. One is the availability of enough stock, and secondly, the kind of huge investment that the industry has already made in the last 3 to 5 years because of the vision that government has laid in. As of now, government maintains that there is no such plan under active consideration to reduce the ethanol procurement for this year. Moreover, we will get more clarity when the government will be releasing the official guideline of ethanol procurement for this year, which starts November 1st. If you see the estimate, the last sugar calendar year which closed in, then the availability of sugar was somewhere around 80 to 85 LMT, which was enough to meet the demand for next around 3 months. Moreover, industry body has also suggested that this year sugarcane production could be somewhere around 337 LMT, which is very comfortable enough for meeting the domestic demand. This is the overall scenario what government currently understands, but more clarity we will get very soon when the official guidelines will be released.
I don't know why sugar prices have to be controlled. You know, now I'm buying vegetables at 200 rupees a kilo or 100 rupees a kilo, and you're getting sugar, which is a processed product, at 36, 38 rupees a kilo, right? So only because you have the industry at your mercy, you're able to keep prices down. That is one thing. And secondly, sugar is also not supposed to be healthy. So expensive sugar will curb the consumption, which will be better for the health of the country. And in terms of time of the decision, I don't know, because they say temporary, then it stays permanent. So in fact, they decontrolled sugar, saying that it's permanent, then suddenly within 3 years, we got controls back. So I don't expect, any time soon that this will reverse. There would be a lot of collapse. In fact, all the new factories who are invested for ethanol will probably be under a lot of pressure now. I don't think the banks are going to be very kind in the way the banks are now. They would probably start pulling the plug immediately. So a lot of people who invested in ethanol will have a problem. We have not invested in ethanol at all. So we will stay as it is. We are not doing B-heavy or juices. So for Shakti, there's no impact.
Okay, so that's the latest coming in as far as the sugar sector is concerned. In fact, let's wrap up that story by going across to Prakash as well and get a sense as to what the OMC ministry has been talking about, because of course ethanol has been a great success story. We have been ahead in terms of the blending target, but would this derail that at all? Let's listen in what Prakash has to tell us.
Yes, we are learning from our OMC sources that they are very much confident to get sufficient ethanol in order to achieve their target by 2025. As you are aware that the government has set a target to achieve 20% ethanol blending target in petrol by 2025. But the OMC sources are saying that they are moving ahead with the target, and as per the plan, they'll get more than 1,000 crore liters of ethanol by 2025 to meet 20% blending target. In fact, they have already achieved 12% ethanol blending target in petrol, and they are on a course to meet 15% blending target by end of current ethanol supply year, which is going to be completed by October 2024. Which means by October 2024, ethanol blending target will be ethanol blending in petrol will be increased to 15%, and after that the target will be achieved, which is 20% by the end of 2025. So it's an important development. In fact, oil marketing companies are very much confident. They are saying that the oil marketing ethanol producers are meeting their commitments, and they are getting sufficient ethanol as of now. Along with that, sources are also saying that government is now focusing on diversification of ethanol production. largely from sugar to food grain items. So on back of that, they are very much confident to get sufficient ethanol going forward. Along with that, we are also given to understand that the government is going to take up the proposal to to increase ethanol prices going forward, which means that will help ethanol producers to produce more ethanol, and oil marketing companies will pay them extra, and that will help them to procure more ethanol going forward.
Okay, let me welcome on board Varun Sabu as well and find out what he's making of the market right now. Varun, let's talk about sectors, because really power has been the story today. Not just the finances, but look at it, Tata Power, which is currently zooming double digits. I don't recall the last time Tata Power was up so much in a single day. Do you think there's still value on the table for any of the power or its ancillaries?
See, there are 2-3 things to it. First of all, thanks for inviting us to your show. Just to mention, so one, we have seen years of consolidation in the space, particularly Tata Power as a stock, right, has been there for a while. There has been so much deficit of power that we keep talking about. We have been talking about the power demand to grow in the country at a stupendous rate, and we are extremely short of power right now in the country. So this is a multi-year story, as we were rightly mentioning before this. Stocks have just started reacting. I think there can be a very, very sharp run from here also. Although we don't have any formal coverage, I'm again re-highlighting. But yeah, this space itself is becoming very attractive. So yeah, I think power story can be interesting. As regards the overall market and what we are focusing on, I think one, with the recent election results which came, there is somewhere a sense of continuity in the governance in the country, which seems to be there. There is a higher certainty which is building in, where we are expecting now that continuity should remain with how the results have been. So this is a great scenario when a government comes in for 2-3 straight terms. It leads to continuity. It leads to a lot of things changing. So, for example, we have seen a huge infra build up in the country in the last 4-5 years, be it digital infra, be it physical infra, everything. And that's what is resulting in how things are turning out to be in terms of how companies are doing, in terms of how your stock markets are doing, equities are doing, etc. So I believe that the run has just started. This could be the biggest bull run that we all are going to witness for the next 5 years, and very good time to stay invested, invest more. It is also getting supported with the fact that FIs had been heavy sellers in the market. For last 2-3 years, we saw them selling roughly 4 lakh crores worth of equity. While on the other hand, we have seen domestics growing consistently. We are seeing now SIP inflows in mutual funds being 15,000 crores, and other investment horizons like insurance, etc., all are also seeing a lot of inflows. AIFs are growing. So liquidity support is also there to the market. So your economy doing exceptionally well, looking very promising from the next 5-year perspective, and funds ever growing, and now FIIs have, I mean, there's no other choice for FIIs but to come back and pour in their liquidity as well, because in terms of their performance, there will be a significant dent, right? Because in terms of country exposure, they are quite low on India, and that will definitely result in they coming back stronger. So I think we are in a very, very good shape, and markets should do very well with a slightly longer perspective.
So that's a view on power, macro markets and a lot more. But let me take it across to our chartists as well. Kunal and Naresh are with us on the show. Kunal, what do you make of a bit of a consolidation? Seems like it's a complete pause button that the markets have hit today.
Yeah, it's a good pause for the markets after I think 7 or 8 consecutive days of uptrend, 4 gaps which have been created into the index in this last 7 days. So it's a healthy consolidation. The bank Nifty also I think has been more range bound. But again, I think today's day is more of market breadth. You're specifically seeing the power stocks looking quite charged up. So there are pockets of stocks and sectors which are looking attractive. Many of the PSU names like NTPC, etc., these stocks have also recovered from their intraday lows. So I believe that that's likely going to be the theme for the markets going forward, that hopefully in the next 1 week, if the index consolidates at this 20,900 plus minus 100 to 100 points, we could be looking at such kind of odd sectors as well as odd stocks making the day for traders.
I don't think it's an odd sector at all anymore, the way power has been run this year. But within power, Kunal, get specific in terms of stock, apart from NTPC, from the broader markets, cash market as well, CSC, etc. Any name that comes to mind?
So CSC was one of the picks which I highlighted, I think at 106-7 levels. Revised the targets to 130. Still be bullish on the stock from current levels. Torrent Power is the other name which I believe also looks attractive. Tata Power, of course, after such a kind of a fierce breakout, it skews the risk reward as such. But I believe that with this kind of momentum, the stock is just indicative of a major ending of a consolidation. So for, I think, the last 2 years, the stock was in a range of 290 as a resistance, and then it came back towards 200, 220 mark multiple times. So what we are talking of is a 100-point range for the stock, which has ended after a 2-year, 3-year consolidation for Tata Power. So it still looks good for more. Of course, buy and dips could be a better strategy for the stock.
Okay, that's the take coming in on Tata Power. Wait for a dip before buying on this one. Naresh, other than power, what are the other trends that you're picking up? Naresh, you'll have to unmute yourself.
Yeah. So we are seeing more stock-specific action rather than sector apart from power. So if we look at it, we are looking at momentum in coming in some of the names like an Info Edge, which is coming close to a breakout. Then you have something like, say, even in the banking space, structurally, most of the stocks are near breakouts. We've taken a pause because the rally was sharp. So ICICI Bank is sitting around the breakout points. You have IndusInd Bank very close to the breakout points. So going forward, after a little bit of a pause, purely because of the momentum, banking and financials as a sector, and specifically banking, could still look interesting. So it's a buy on dips on some of the larger banks like SBI, ICICI, IndusInd, and even smaller ones like a Federal Bank.
Okay, so that's the take coming in on the banking names, power sector, and a lot more. But time now to take a short breather on the show. Don't go anywhere. When we come back, we discuss a lot more stocks.
Back with closing trades, right here on 80 now. Consolidation, and that's quite comfortable, frankly. It's really been a one-way tear for the market. So around the 20,900 mark, you're not really complaining. IEX, Tata Power, Power Grid, Adani Ports, some of the pharma names like a Cipla, DRL, they are the ones which are actually holding out well. As is India Cements too, that's also scaling up by about 4% right now. In fact, we should bring up the intraday chart of that stock because a chunk of the move on India Cement has just come in the last 1 hour or so. There's Indus Tower also holding up by about almost 5%. And then Concor too looks smart by about 5.5% or so. Varun, besides power, the other theme in the market, and a large umbrella at that, has also been PSUs, right? Do you still have conviction in this theme, or do you think 2024 it could get a little bit risky, purely because of the impending elections?
Honestly, I will be very positive on PSUs still. So one thing we have to realize, this has been the best time PSUs are having in a long time, but they have still been very reasonable in terms of valuations, how things have been. So there was a long catch up due in them, which has been the case. And second, also, as I mentioned earlier, the same point, when there is continuity in the government, when there is continuity in the ones who are owning you, their policies, etc., are in place. So things will flow down. So say, for example, when we come to defense stocks, you know that there are, so the narrative still continues. You're going to see the same thing what we've been seeing, the kind of ordering which was there, which might continue going forward. So there is a particular narrative this government has been running with that ideally will continue, is what one has to understand. So all these PSUs will be the ones through which these narratives are fulfilled. So as in business per se, they'll do very well, and they all are still quite reasonable in terms of valuation. So I think PSUs should be there in the portfolio, and there can be still a good enough compounding you can see over a period of time in them.
Okay, so still some compounding as far as some of these public sector entity names are concerned. Yes, of course, it's power stocks which are doing well, but then there are home financiers as well that also deserve mention. Look at a Home First Finance. It's higher by 6 to 7%. Hudco is also holding up. And then, of course, there are other names as well from that entire real estate basket like Prestige Estates, etc., which are holding on comfortably. On the losing side, one can't forget Paytm and the drubbing that one is seeing. Varun, what's your take on Paytm and this entire unsecured lending business and RBI raising red flag? Is there more that we should expect in terms of the second rung and third rung impact of it as well? Because initially everybody came out with an explanation, we are not impacted, but now slowly and steadily we are seeing that reality on ground.
See, again, we don't have formal coverage today, but just to mention, I think recently management has mentioned that they will be moving on the higher ticket size lending going forward. So, is the impact of the lower ticket size there in the price? I think to quite an extent it is, because I think roughly about 40-50% of their overall disbursements were coming from the lower than 50,000 book. If we have to consider kind of fall the stock has seen, it's covering up quite a lot for that impact. I think from here downside should be limited. We'll have to see on the thing which they've mentioned that they'll be growing more on the larger ticket size loans now, how that pans out. So that will give you a better visibility. But yeah, the stock has taken a lot of beating.
Okay, on that note, Varun, we'll let you go. Thank you so much for making time and speaking with us. So that's the latest coming in. In fact, on the losing side, you also have Network 18, TV 18 coming under pressure. Sugar stocks, though off the lowest point of the trading session, are still trading in the red. So EID, Parry, Praj Industries, which has been a good ethanol play, are all in the red. And Aditya Birla Capital along with Paytm is also down 4%. But let's take the closing trades. Ideas from our chartist. Naresh, what's the closing trade idea?
So that would be a buy on Voltas, a stock which has been sideways for a really long time, has now finally made a up move, made a new swing high, decent enough price volume action in the day. The stock has gone nowhere for almost a year now. So expecting this to bounce back towards the 900, 950 mark.
Okay.
Right.
Kunal, what about you?
So I'll go with a buy on SBI from the PSU banking lot. Interestingly, looks like that the stock is heading towards a breakout of a major consolidation. So expecting SBI to do exceptionally well in the next couple of trading sessions.
Okay, on that note, let's take a very quick break. Still pretty quiet, and we're down about just 20 points actually on the futures. We'll take a very quick break to track the last lap of today's trade on the other side.
Welcome back. It's still around the 20,900, though there has been an intraday dip that we have seen and a sharper dip as far as the Bank Nifty is concerned. In terms of points, it's not much, but for most part of the day since the Bank Nifty was in the green, something to take mention of. In fact, IDFC First Bank is down on account of that large deal that happened at the start of the day, and then ICICI Bank, Axis Bank too are reversing a bit. The other large cap names which are coming under pressure is HUL, down about 2%, and in fact, there was a note, or rather quite a few notes this morning talking about how volume growth in Q3 is going to be flattish or just around 2 to 3% because there hasn't been any meaningful uptick on account of festive sales, and in fact the inventory seems to be high. Let's pose that question to Amnish Agarwal. He's the head of research joining us at Prabhudas Leeradhar as well. Amnish, what's your view on HUL and the rest of the FMCG players, whether in ITC, etc.? Do you think in terms of the sector churn that we are seeing, these FMCG companies will not be in those top 3, top 4 bets that investors would be looking at actively?
You see, we have been having an, what you can say, underperform or not in our model portfolio. We are actually having lower weightage to the consumer sector from quite some time, and that too, the weightage is lower more for the consumer staples. Now, if you look at say past 2-3 quarters, the volume growth has been below par and mainly impacted by the slower than expected recovery in the rural demand. So that is one. Secondly, particularly in the previous quarter, the margin expansion which was being anticipated on account of lower raw material prices, that has also not been to that extent. Now, given the backdrop that the rural demand is tepid, plus most of the large companies, they are facing increasing competition from the unorganized, smaller or regional players, has put these companies in some sort of a tight situation in the near term. So I think given this kind of a scenario and the fact that the stocks are still trading at maybe barring 1 or 2 stocks here or there, the P multiples of most of these stocks are not cheap. So I believe that in this sort of a scenario, any significant re-rating for the major consumer stocks looks unlikely.
No re-rating for some of these consumer names, but do you think re-rating that we have seen in the power stocks is just going to multiply from here on further? I mean, the move on Tata Power today is nothing short of spectacular.
You see, this is a classic, I would say, churn which is happening, and it is not, I would say, a one-day affair. Because if you look at, say, particularly from the last maybe more than 10 years, there was a very easy trade that sell the asset-heavy companies and buy the asset-light companies, or the companies where the, I would say, the balance sheets are lighter or better. For example, you look at consumer stocks, you look at banking, okay, particularly the private banks or some of the other such sectors where the return ratios were good and the capital requirements were lower. So all these sectors, they remained in limelight for considerable period of time. However, I think for the past few months now, I think that I would say a classic sectoral churn is happening where some of these PSUs, some of these, I would say, asset-heavy companies, they are coming into limelight. And given the fact that the economic growth in India is happening and there is a requirement of power, for example, the power demand is increasing in, say, something like mid to high single digits. So that is a perfect recipe for, I think, growth of some of these power companies, because the power consumption in India overall is low, and particularly if you look at the way now electricity has reached practically every village of the country, and as people they start using more of the appliances, more of, you can say, white goods and all, the power demand is only going to increase. So power stocks, I think in the near to medium term, they might remain firm, because the gestation period to setting up these projects is also considerably high.
Okay, that's the take coming in power. Most of these names, of course, are jumping up in trade. Still got a great move coming in. Tata Power, 12% higher. IEX, of course, has been very strong as well, a 7.25% move. But Z is the one which is intriguingly up about 5.5% as we speak right now. And that surge has just come in the last lap or so. 270 is where Z is right now in trade. But let's also address some of the laggards as well. Of course, you had that Warburg Pincus stake sale. Bharti down about 2.5%. That's one of the biggest drags. There's some consolidation coming in for L&T as well. That's languishing a little bit in trade. Kunal, you think dips like these should be good entry points at L&T? I mean, any price is good?
Yeah, so I think if you're a trader, then of course, yes, it makes sense to buy the dips for L&T. But I'm not sure from a long-term investment perspective whether the stock is at these levels could probably warrant a buy in terms of the portfolio, because this is, I think, the 6th or the 7th straight quarter of up move for L&T. It's typically a very low beta name, low to moderate beta kind of a stock, and it's given consistent returns. I think in the last 6-7 quarters from 1500, 1600 mark to 3300 plus levels where it's trading. So yes, odd corrections like a 50-point, 100-point dip from a short-term perspective could be a good buying opportunities, but specifically short-term.
Just looking at a couple of other names, sugar, of course, has definitely been one beaten down pocket, even though some of these stocks have resurrected themselves from the session lows, but still not made it back to the green. Naresh, let's address some of the liquid names, and namely Balrampur Chini. Accumulate on dips, or would you say avoid right now because the news flow is not really favoring the tide at least?
So if you look at Balrampur Chini, that's the one where one can actually say look at a buy on dips, because it has not outperformed the way some other names like Awadh Sugar or Uttam Sugar have done. And over the last 1 year, if you look at it, there's a strong base around 370 to 390 mark, where it has made a bottom. So you want to buy it closer sub 400 levels till 370. So that's the band one can accumulate in parts. The structure remains okay. There's a very strong base around this lower areas, but a recovery could take time. It should be a slow and steady recovery. So one can look at it as a slow and steady accumulate, and then have a medium-term outlook on this one.
Point taken. So that's the latest coming in as far as some of these sugar stocks are concerned. In fact, let's go across to Sharad to get a sense as to which are the other sectors and stocks which are on the radar of dealing rooms today. Sharad?
Well, yes, the stock which is buzzing in the dealing room is India Energy Exchange. Now, what we are hearing from the dealers is that clutch of HNI investors have acquired the stock, and the strong deliveries have also been coming. Volumes, if you look at it, it's almost 5 times its 20-day average, and over the last 2 trading sessions, the stock has given almost 10% return to the investor. Importantly, the key DIs already invested in the company include Dalmia Group, which is having roughly 15% odd stake, and even LIC. Now, 2 days after November month, the operational numbers also came, and there was almost an 18% year-on-year increase in the volumes. Also, importantly, recently reports have also surfaced that CRC had actually floated a consultation paper, and where the majority of the stakeholders in the power industry actually opposed the implementation of the market coupling norms, and it's expected in the street that there might be a longer delay also in case this implementation happens. So because of that, street is buzzing with a positive chatter.
Okay, that's IEX in trade for you. Clearly holding up very well, great volumes, and Chara just told us that there's been some buying at the HNI desks as well. In fact, we had that same conversation with Manish Sonthalia as well earlier today. Let's hear out his market opinion. Okay, we'll just play that soundbite for you in just a second from now, but we were just flagging off IEX and the futures itself. You're seeing a solid 7.25% move on IEX, and of course Tata Power has been going from strength to strength. But here's more from Manish Sonthalia.
Obviously, if all the factors are positive, I mean, it works well if you ride the momentum. So I would believe that markets are still headed higher, and you got to do your stock picking within this entire setup. And that's how we are placed. I mean, it's a question about flows, and you can't ignore India for too long. I mean, that's the entire truth. Because if the fundamentals are supportive, if the macros are supportive, both global and local, then obviously it's only a matter of time. I mean, there will be difficulty in finding good quality paper when the flows turn positive also from the global side. So, I mean, at the end of the day, it's a bottom-up stock picking. I mean, that is how we would like to place it. I mean, there's no denying the fact that, the outcome for the next many years to come is going to be positive, but it's going to be our individual stocks. Financials are an ignored lot and, have been underperforming for some time. And of course, if the profit momentum is to happen, then financials will lead. That's one space. I would believe technology again is a comeback sooner than later. Again, valuations here are very, very palatable. We just saw the recent listing of Tata Technologies. What a euphoria you've seen. So, technology is again one area where, there will be good growth. And the third space is only a matter of time is your pharmaceuticals. Again, they will come back on a low base. So I think, valuations where these are comfortable are these three sectors which should lead from the front. So both within the PSUs and let's say the private sector banking space, there's ample value. So within the private sector, public sector, like financiers, we would like the energy financiers, the likes of, let's say, PFC, REC, IRDA. So I think energy is one space which will buzz with activity. I mean, it was long said that defense stocks also were very full in valuations, but the valuations have only got richer with each passing day when you have more defense orders coming through. So, I mean, this defense story, power story is not for 1 year or 2 years. It's for many years from now. Financials are an ignored lot and, have been underperforming for some time. And of course, if the profit momentum is to happen, then financials will lead. Both within the PSUs and let's say the private sector banking space, there's ample value. Within the private sector, obviously the known names are there. And you will have a blind call on an ICICI Bank being on the positive side, then HDFC Bank being on the positive side, just based on pure valuation. I mean, you can't go really wrong in these names where valuations are mid-teen types. So that's how we think it's, and again, within the financials, the platform companies. So whether it be an exchange platform company or a repository exchange platform company, or let's say broking platform companies or AMCs, I mean, I would think that these are the spaces to own within the financials for the next many years. Unsecured credit was growing the just too high. And of course, banks used to allude to the fact that unsecured lending was just about 5% to 10% of the overall book. But of course, the next NPA cycle, according to me, is going to come on the retail side. And even NBFCs who are financing bulk of these unsecured loans. I don't think it's going to be a problem majorly for the banks per se, because as we said that proportion of unsecured lending to the overall book is very manageable. But the NBFCs are going to be at the bearing brand.
Point is taken. That's the latest coming in from Manish Sonthalia. But as we were talking about, it's Home First Finance and Hindalco, which is actually gaining a bit. Nuresh, what's your view on the charts for these two?
So both of these names look interesting. Home First is a very interesting chart because over the last few weeks, it has been in a very sideways range of 860 to 980, but we saw a block deal also happen 8-10 days back. And now finally the stock has broken out into a new all-time high. So the stock had topped out around these prices only around 980 back in August of last year. So a classical cup and handle formation here. So remains a buy at current levels as well as on dips. Could be a slow and steady mover towards the 1200, 1250 mark. So looks interesting. Hindalco, the same thing continues with the whole public sector enterprises. Good momentum, a breakout today. But given that move today, the risk reward is not great. So one could start off with a partial position and then add on dips.
The other space to watch out for is IT as well. Today, of course, is the last date for retail viewers to perhaps tender in the TCS buyback if they want to, though it doesn't seem there's much money on the table as far as TCS is concerned. But what's your view on the sector? Is this the good time to probably start adding? Because probably you'll get it at the bottom. Third quarter earnings are not going to be great in any case on account of seasonality. Or just wait out, maybe next year is the time that one should look at getting into IT again. Amnish, the question is for you.
Okay. So you see, IT services has been underperforming from quite some time. And we have seen recently Tata Tech IPO did well, but companies like Tata Tech, LTTS, Cyient, KPIT, they are into a very niche segment which has been growing at a pace which is much faster than the overall IT services industry. Now, IT services, their fortunes are directly linked to what happens particularly in the US and European economy, and Europe particularly is under a lot of pressure. Whereas the US has still, I would say, done better and it has held on to, but the visibility in terms of growth still remains muted for the next 1 or 2 quarters. So if you look at particularly the sectoral rotation and the where the stocks are traded, maybe in terms of the multiples, they might have bottomed out. But as of now, the bet seems to be more in favor of the niche segments where the companies are doing better, the growth rates are better. However, I think maybe a couple of quarters down the line, the fortunes of the other biggies like Infi, TCS, etc. will also start improving with the growth rates inching up. So I would say that some of these names may be considered from, say, next 6 months or a 12-month viewpoint, particularly on dips when the valuations are on the right side and the news flow is in the negative.
The take coming in IT right now. But Amnish, are you spotting any other contra trends in the market?
You see, one contra trend, I would say rather there are several contra trends like I have highlighted in my previous, you can say, discussion with you also, and which is very clearly visible today when we talked about, say, the tepid consumer demand. So if you look at, say, again, your PVs are doing well, even premium autos in two-wheelers are doing well, jewelry is selling well, but in the similar vein, the consumer staple companies are not doing well. Even the QSRs are not doing well. So this is clearly some sort of a shift of spending which is happening as far as the consumer wallet is concerned. So this is one trend which I'm very clearly witnessing, that the discretionary segment or certain segments are gaining, whereas you can say the common things are not selling. The second trend which is very clearly visible is with regards to the rural demand. Post-COVID, the demand actually never came back like it used to be earlier. Then we were pinning hopes on, say, last year that the crop prices will be higher. Then this year El Nino has come. So somehow, somewhere, the things again shifted to that it being an election year, the government will increase the spending and then the demand will come back. But somehow I think that has not translated to that extent. So one clear trend which seems to be there, even say in case of the rural demand, is that again, if you look at, say, today, even from the rural India, from tier 4 towns, people use, say, your platforms like an Amazon or Flipkart to order, where the GOV during the festival season was up by 40%. But if you look at the on-the-ground sales or the general trade, in some of these items, the sales are not happening. So maybe the wallet share is shifting, maybe the channels of distribution are shifting. But I think these are some of the very, I would say, trends which are available within the sectors, within the segments. I think there are several trends which are flowing at the same time. And one trend which is very clearly again visible, which has been highlighted by RBI and by I think some of the large banks also in the past, maybe that your personal or the consumer loans, the way they have ballooned in the last 2 or 3 years. So there are some, I think, red flags which could be visible over there over the next 6 to 12 months.
But all of these sectors that you've talked about, K-shaped recovery, consumption, the RBI circular, in terms of stocks, Amnish, which are those top recommendations from the House of Prabhudas Leela right now?
Okay, you see some of the sectors which we have been very positive, and I still believe that these your sectors or these stocks, they represent the multi-year trends. One clearly is capital goods. So capital goods, I think particularly post the recent state results, now the uncertainty with regards to the next Lok Sabha elections has got reduced. And so I believe that all the, you can say, your capital goods companies, whether they are on the engineering side, railway side, defense, so these all companies should continue to do well. So we are there. I think we have liking for, say, Siemens is there, even Hindustan Aeronautics looks good, Carborundum looks good. So I think the pack in general, the entire your capital goods is one pack which looks very interesting to us. In addition to it, hospitals is another segment which we are very positive about. And one of the stocks which have been pitching to investors has been Max Healthcare, where there's a lot of brownfield expansion which is coming into play next year, and I think the stock should do well even from the current levels. So I think these are two baskets, and then private sector banks are there, where the valuations are, I would say, at a multi-year low. And on the consumption side, we have been pitching for some of the discretionary names, although whether it is a Titan or an Avenue Supermart, these are not cheap in terms of valuations.
But just hold that thought. There's important flash running for you at the bottom of the screen. It looks like the government has passed some order to curb the flow of sugar into ethanol for now. It seems like India has directed sugar mills not to use sugarcane for ethanol production, and that seems to be a government order. This is, of course, something that we are picking up from agencies at the moment, so we'll have to wait for, a clarification and a confirmation on that. But this seems to be incremental news flow on the sugar stocks, which will not be taken well. Let's see if there is any first-rung impact that we are seeing on the stock prices as of now or not. There's, of course, AID Parry, which is down 6%. Balrampur Chini is coming under pressure, and as we speak as well, there is a bit of a slip that we are seeing across the board. So, of course, the confirmation is something we'll have to wait back. There has been a bit of a flip-flop because ethanol blending has been the poster boy per se in terms of the success story of India, in terms of how OMCs have been ahead of the curve in terms of blending. We're already at 12%, 20% target is to be met very soon, 15% within a couple of years itself, and a lot of these companies had taken capex as well in order to meet that demand. In fact, that is a conversation we had with the management of Shakti Sugars as well. We played a part of the conversation for you, but I think we can go back to that conversation to get a sense as to what they are hearing and the kind of impact this particular order is going to be there on the entire sector as a whole. Because right now the prices in India in terms of the domestic sugar is around 37-38 rupees per kg. In the conversation we had with the management, they were saying that it needs to go up to 42-43 to become profitable. Listen into what the management of Shakti Sugar was talking about.
I don't know why sugar prices have to be controlled. Now I'm buying vegetables at 200 rupees a kilo or 100 rupees a kilo, and you're getting sugar, which is a processed product, at 36-38 rupees a kilo, right? So only because you have the industry at your mercy, you're able to keep prices down. That is one thing. And secondly, sugar is also not supposed to be healthy. So expensive sugar will curb the consumption, which will be better for the health of the country. And in terms of time of the decision, I don't know, because they say temporary, then it stays permanent. So in fact, they decontrol sugar, saying that it's permanent, and suddenly within 3 years, we got controls back. So I don't expect, any time soon that this will reverse. There would be a lot of collapse. In fact, all the new factories who are invested for ethanol will probably be under a lot of pressure now. I don't think the banks are going to be very kind. And the way the banks are now, they would probably start pulling the plug immediately. So a lot of people who invested in ethanol will have a problem. We have not invested in ethanol at all. So we will stay as it is. We are not doing B-heavy or so. For Shakti, there's no impact.
Okay, still a developing story, and we'll be on top to track that one. For now, of course, you've seen a sharp reaction come by on the sugar names, which are closing in at the session lows for themselves. Amnish, great to have you on the show. We'll let you go on that note. Let's begin winding up for the day. Kunal Naresh, we'll see you also with the trade tomorrow morning. Closing in just mildly soft for the Nifty. 20,900 is where we're shutting shop for the day. AB Capital, Balrampur Chini, Bharti, Unilever, IDFC First. That's where you've seen concentration of the losses, along with, of course, ITC and L&T as well. But it was clearly power all the way. So everything with the Tata Power, there was IEX, all these stocks held out just very, very smartly in today's trading session. Power Grid as well, they made a decent move. There was NTPC with a 1% uptick as well. These are the pockets which shown very well from within the broader end of the market. Z, Concor, Indus Towers, these were some of the other movers in today's trading session. Not such a bad day for HDFC Bank, for a Titan, for an UltraTech Cement, and to some degree even ICICI, which has in any case been quite a performer year to date. But on that note, we're going to wind it up right here on this edition of Closing Trades. We'll see you tomorrow morning at 8 a.m. with all the market action.